The bearish tendencies for U.S. stock markets of the past week seems to have resumed as per the movement of the three major U.S. stock market indexes, which all moved sharply lower as the week came to a close. Today we are to discuss the implications of the U.S. employment data, which was released on Friday, the guilty verdict given to Google on Monday, Intel CPU issues, Disney's earnings and next week's earning releases, and for a rounder view, finish the report with a technical analysis of Nasdaq's daily chart. Following the U.S. employment data for July, widespread concerns about the potential recession in the U.S. have risen. In particular, the unemployment rate was expected to remain steady at 4.1% and the average earnings growth rate to slow down to 3.7% and the NFP figure to drop to 175K. Instead, the average earnings growth rate came in at 3.6%, the NFP figure dropped to 114K, and the unemployment rate ticked upwards to 4.3%, implying a loosening labor market in the US. As such, following the release of the US employment data, widespread fears of a potential recession in the US led to a massive sell-off across all asset classes, with investors opting to increase their cash holdings, possibly in order to re-enter the market once the dust settles. The sell-off led to a sharp decline in the US equities markets, with all three major indexes moving sharply lower, in addition to impacting Japan's Topix index, which tumbled more than 12% in the biggest sell-off since the Black Monday crash of 1987. Nonetheless, should we see Fed policymakers adopting a more dovish tone in the coming week in order to ease market worries, it may further alleviate the market's concerns, which in turn may encourage investors to re-enter the market and thus could possibly provide support for US equities. Google was found guilty on Monday of having an illegal monopoly over online search and related advertising. In particular, U.S. District Judge Mehta stated that after having carefully considered and weighed the witness testimony and evidence, the court reaches the following conclusion. Google is a monopolist and it has acted as one to maintain its monopoly. The ruling is being hailed as a landmark case in which the government has asked for a structural relief, which in theory could mean a breakup of the company. Nonetheless, the ruling against Google may weigh the company's stock price, yet that may be determined in a future hearing where the potential fines or remedies will be decided. Intel CPUs are once again the hot seat, with Intel 13 and 14 generation CPUs having problems for months, with constant crashes and blue screens of death, according to some media publications. The company has stated that it would push out a microcode patch in the middle of August that may fix the issue. Moreover, the issue has led to Intel announcing that it will provide an additional 2-year warranty extension from the date of purchase up to a maximum of 5 years on Intel Core 13 and 14th generation desktop processors. The issues faced by Intel could potentially impact the company's revenue and sales, and should the issue persist in their next generation chips, it may weigh on the company's stock price. Disney's earnings were released earlier on today. The company beat earnings per share and revenue expectations. The better-than-expected earnings report for Q2 of 2024 may provide support for the company's stock price. As such, should the company continue to exceed the market expectations in the following quarter, it may further aid the company's stock price. As for incoming earnings reports, we note Home Depot's earnings on Tuesday, UBS on Wednesday, and Walmart and Cisco on Thursday. Nasdaq downwards motion appears to have continued, with the index having temporarily dropped below the $18,000 mark. We maintain a bearish outlook for the index, and supporting our case is the RSI indicator below our chart, which currently registers a figure below 40, implying a bearish market sentiment. For our bearish outlook to continue, we would require a clear break below the 17,900 support level, with the next potential target for the bears being the 17,000 key support base. On the flip side, for a bullish outlook, we would require a clear break above the 18,830 resistance line, with the next possible target for the bulls being the 19,500 resistance ceiling. Lastly, for a sideways bias, we would require the index to remain between the 17,900 support level and the 18,830 resistance line. As this report concludes, we would like to thank you for being part of our financial updates. We wish you a solid trading from all of us here at IronFX.